What is up? What is up? What is up? This is Dre, and welcome to This is Dre Show! I always wanted to say that, man. You know, just act like I got it going on, and, you just couldn't wait for me to tune in. And I just popped my eardrums on that, too. All right, give me a second here. A live video, trying to get the feed up. Trying to get it up on YouTube. Just in case you guys want to talk to me. I can kind of see it right here. All right, so been gone for a week. Market's been hot. Everything. Go into my past. Go into the feed, the history. Look at all the stocks I've been recommending. But it's everything's going up. It's almost like a melt up. So I can't toot my own horn, because if you have a list of stocks and you take a dart and you just throw it, pick one, that stock is going up. I mean, you have to pick some bad stocks for it to go down. I mean, everything is going up. So I got the NASDAQ 100 up. This is the weekly. And there was a couple of things I wanted to talk about it. I mean, look at the skyrocket. Remember back in November? So this is going back 2 years, 3 years, 1, 2, 3. And let's just focus right here. Remember this? Remember everybody got scared? And then look how it just rebounded. But here's the thing. Here's the top right there. What are we talking? August, September, October, right? It was just kind of flatlining at the highs. Generally, when you reach a point of prior resistance, you kind of don't really blow through it. Look right here. Look to the right here. How it just blew through that. It didn't even care about these highs. It didn't care. That's kind of concerning, because I actually think it does care. Yeah, I think it cares. It's just not showing us its hand yet. I mean, is it gonna... Sorry, I'm trying to get right here. Is it just gonna keep on blasting up to the moon? No. So I do think there's a pullback coming. And it's probably going to be, let me see, Facebook reports tonight, the FANG stocks, Facebook, Apple, Netflix, Google. I think Netflix, did Netflix report it already? No, it just got slammed because of Disney. And throw in Apple. The FANG, F-A-A-N-G. Possibly when those report, this thing is going to come down, regardless if those are good or not, because they already rallied. They already went up. Now, I got some trades in Facebook, some earning trades in Facebook and in Chipotle. I didn't talk about that one on my channel yet. That stock has burnt me. It's burnt me. Oh, man. How do I look at the live? I don't know. So I'm watching it on my I'm watching my own channel, but I can't see the comments, so I don't know. I thought I knew how to do it, but maybe if I turn it this way. Nah, I don't see anything. Maybe I messed it up. Well, anyway, what was I talking about? Chipotle earnings. Yes, indeed. So anyway, I was just a little concerned about this. If you go to the SPY, which is this S&P 500, most of the stuff, you could kind of see it's the same thing, but we didn't blast off to a new high. Although they did say we hit a new high yesterday. We might have touched it, but here's the high. Well, that's the intraday high. So I would say closing high, yes. You see how it's wanting to slow down there? See how it's just not going to blast through this line like the NASDAQ? It might just want to kind of hang out, right here in this area. Oh, right here. Can I draw a little box? Just want to do some things. Yeah, nothing's working today. Nothing. I was just trying to draw a grape. Look at that. I can't. There it is. Look at that. Nah, get out of here. Get out of here. So nothing's working, dudes. Oh, I don't think I can see y'all comments. So if you are saying something, I don't know if I can read them or not. Maybe you could say something to see if I could see it. But I mean, I don't see anything. If I turn it this way, yeah, I don't know. Anyway. What was I talking about? oh yeah, it's not doing what the NASDAQ do. Like, it's gonna blow through this. It looks like it wants to hang out. So I do have a trade in the SPX. I forgot the level. Look at that. where it's up here. Basically, I'm calling a temporary top. It's a 10-day trade. I think it's gonna bring me home like 25%. Yeah, I should write these down, but I sold the call spread up here. I think it was like the 29.80 to 29.90, somewhere up here. I said, you know what? It is not going to get up there in the next 10 days. I really think that it's going to come up here and just struggle with this all-time high. I don't see it blowing past. I don't. Look at the history here. You see all of this going on right here, right there. You see all that going on. Well, look what happened when it reached that point before. Even though this rally was so strong, it did pull back a little bit before it just blasted through that point. But that was a lot going on right there. There's a lot of resistance, and this is a double top coming up here. So generally, the people that's all in and they lost all this money and they kind of held on and they get back up and they just sell, right? That's the people that sell, and they're like, oh, I'm out. And plus the double top people, the people that believe in the double top, they want to sell too. But it's like, oh, I got all my money. Ooh, I'll never invest again. I can't believe it. I got it back in 4 months. Oh my gosh. Those are the people that selling. Also, the people that say, oh, double top, got to sell. Just the mechanical people and maybe those machines, they selling on algorithms. What the hell was that? Yeah, I got a lot of things going here. So yeah, that's what's selling. But we had babe these shadows. Okay. Got text going on and stuff. So yeah, that's what's going on. So let's talk about my trades. Let's talk about Facebook. Now I know I'm going to do a video on this. I talk about the same stocks. Why? Because the same stocks, these are hot. You got to just milk it for what it's got. You got to get all that money that is just thrown at you. They're hot stocks. They're in play. They're making money. So why trade something else? If you go out and you find like $5 under the rock over there, when you keep checking that rock, make sure another $5 ain't gonna pop up. Yeah, why check the other rocks? You know where the $5 popped up before. So that's basically what's going on. All right, so Facebook. Oh man. Yeah, let's bring up the monthly. I think that's the one that shows the beautiful picture. And see what goes on. Look at that reversal off the bottom. Big body candle, consolidation, and what is that? Yeah, this is a month, 2 months of consolidation for the most part. And now it finally blows through. Tonight is earnings. And what is this thing going to do? It's going to move, okay? We don't know if it's going to go up. We don't know if it's going to go down, but it's going to move. And I have a play on it. I sold a calendar, right? Or bought a calendar, meaning I went out a couple of months in the future. Let me see, right here, June 21st. Let's look at the position right here. I bought the 185 call for $8, approximately. And then I came over here for the earnings week and I sold several positions, the 190 and the 195. Now, why did you do that? This is Dre. Because the implied volatility is so high. It's so high. You can see it right here. It's 80%. Where normally it's, look, I bought the 29, it's 29%, 80%. These options are overinflated. So if it goes up, if it blows past through these strikes, yeah, I'll lose money, but I got the calls. I got the 185 calls. Now, I don't know if you understand this, so I'm talking to people that kind of understand what I'm saying. So basically, if it goes up, I got the longer positions that's going to make me money, but I'm going to also collect on these options that I sold, right? Because it's inflated value. Look at it. They want $2.87 a share for 100 shares, these options. So that's $287 if it gets to 190. So you basically saying, hey, I forget it's it. How does that go for options? You're obligated or not obligated. You have the option to buy it at 190. So if it reaches 190, you get to buy it for 190. But you paid $2. You already paid $2 for that. So to break even, it's 192.87, right? So that's where it really needs to go, just for you to break even. Okay, so that's the inflation. That's the implied price, the extrinsic value, just totally overinflated. All right, so I won't talk all that technical stuff, but that's one of the trades I got going. And if you look right here, let's go to the analyze. You could see the positions. So right now it's at the 183.28. That's what the stock is trading at. So now you're going to be able to understand this. Now, if this blue line is when the options expire on this Friday, those ones I sold short. So if it goes up to say 185, let's say 186, because that's where it is. I would, by Friday, I'm going to make $1,122. As you can see, if it just goes up, I'm making money. I'm making where this blue curve is, right? So what's on the opposite side of this 183? Oh, I kind of start to lose money. So right here, this line is the break even, which is about 170. It's about 179.13 or so. That's the break even. So if Facebook comes out earnings and boom, it goes down about $4, I broke even. I didn't lose anything. So I got $4 on the downside. You know why? Because that remember that stuff I sold? It's overinflated. All that money I get to keep. So, but after that, those long options that I bought, you remember a couple of months out, they're gonna start losing value. Well, they are losing value already, but what kind of keeps me making money is those ones I sold short. So they'll start to lose value. And say if it goes to 175 tonight, I'll be down $615. Yeah, so that's kind of how it works. So how do we know how much Facebook is going to lose? Well, it tells you right here. This is the Thinkorswim platform. This MMM, Markers Makers Move. They saying tonight this stock is going to move $10 up to $10. That's their guess. Nobody knows, but that's what these options are priced at. This stock moving $10. And you'll see, I'll come on tomorrow and tell you exactly what it moved. If it moves, it can move less or more, but generally this is kind of right. And I don't know how they do it, but it's kind of right. You know another way to figure it out? You know another way? So you pull up your option change, you got your calls on one side, you got your puts on the other side. All right, so if you look at the strike, which is 182.50, which is the current price, actually is 183, but we don't have a 183 strike. And you just add up the call, 605, add up the put, 510, it's $11. Minus that extra dollar, $10. Look at that. See? So the options are priced so expecting a $10 move, basically. Right? So if you were to buy this option right here, this $6, well, say 185. You want the right to buy it at 185. Because let's say it goes to 200, you want the right to buy it at 185. But let's say it don't move anyway. You're going to pay almost $5 for that right. That means to break even, you need it to go at least to 190. Suppose it doesn't go to 190. Well, that means you lost, even though it went up. It could go to 189. Even though it went up, if you bought this option right here, you would lose money. That's why it's always better to sell options. Sell this stuff. This is everybody's. Look at the volume here. Yeah, it looks like a toss-up. Generally, when I look at the volume, now this is just my little thing, the stock always seems to move where there's less volume. It wants to fake the most people out. Yeah, looks like a lot of people got spreads on looking at these numbers. And a lot of people, yeah, it looks like more people are in the puts and are messing with the puts. Maybe they selling puts. I don't know. So what's going on? Let me put a test comment in here. TEST. Test. It says comment added. Okay. Let me pull it up on my phone. So anybody have any question? Oh, I can't even answer your question because I don't know. I'm just not seeing the comments. I'm glad you guys is watching because you've seen how I said if it just goes up, let's go back to the analyze. Let's analyze my trade. Let's say it goes up that $10 that it's expecting. So what is that? It's 183. That's 193, somewhere right here. And you can see the blue line, I'm max profit right there. So if it does go up that expected move, I'm going to be up $1,700 tonight. Now, that's one side of the trade. That's one side. Let's say it goes down, $10 $10. Hold on now. I'm pulling up the video. I'm pulling up the video right now. The blue line, I'm max. That's me. Right there. So oh, you know what? I can see the chat on this. Can't see it on my tablet. Okay, so let's say it goes down. Set up that phone. Hold on. Let's say it goes down 10. So that's 172. I'm out $776. But one of the good things is that I still have those calls. I own those calls. So it's like I own cheaper calls. They lost money. So that's where I'm at. I'm risking, according to the market makers move, $770 or so to make $1,700. That's the risk. That's what well, that's not the true risk. The true risk is like 1,700 or something like that. You know, Facebook has one of them quarters. Remember it lost, oh gosh, remember it lost like $40 or something. It was crazy. As a matter of fact, it lost the biggest amount in stock market history or something like that on the earnings report. That was crazy. So if it does something like that, yeah, I lost a significant amount of money. But if it just, you know, just kind of hangs in there, goes up a little bit, you know, I'm looking good. So that's Facebook. And back to that chart, this is beautiful. I mean, this is where you document breakout. Let me clear these drawings. Like this is, if you look up the word stock breakout, this is the stock you're gonna see. It's gonna come down, hit this resistance right here, right? And kind of play around and boom, almost a cup and handle too. If you look at that, low volume right here, low volume, pressure's building, and it's blowing already. But is it going to keep blowing, right? So that's what we're hoping for. A lot of times when stocks are supposed to do something, they go hard the other way. So if it's the other way, it could actually go hard the other way because everybody was expecting this way, and then it goes this way. You see what I mean? Chipotle. Let's talk about it. CMG, Chipotle Mexican Grill. Gosh, look at this thing. This is scary. I would say it's not going to go that much higher, but I think it's going to test this all-time high, just like the NASDAQ has been doing, even though I'm not sure if this is a NASDAQ stock. Generally, I don't know what this is. It's got 3 symbols. I don't know. Is it going to test the all-time high? I don't know. But I got the same kind of trade going on. Let's look at it. Let me add in all of these positions here. This one's kind of funky. Now, let's look at for the market maker move $50. They thinking this thing is going to move $50 tonight. Tonight, that's when this thing reports. So let's look at what I got going on. Right now it's trading at 702, right? 702. Oh man, I done lost. 702. Let me spread this out for you. All right, so right here, 702.30, that's where it's trading at. Suppose it moves $50. That's all the way down here. They say it can go down here anyway, up to there. If it does, I will be up $2,428 if it moves that 50, right? Sounds good. Sounds like a good trade. If it, as you see, look at the blue line. If it just goes up, I made money. But where I made the most money, if it somehow stops, and this is by Friday, not tomorrow, but we're gonna say it hangs out there Friday. $3,116. All right. Now let's say it moves $50 the other way. We don't like to talk about it, but man, I would lose $521. See, that's not bad. That's not bad with the calendar. Tomorrow, though, well, I don't know. It's kind of hard to read these calendars. I will have lost significant amount of money. But as the week goes, if this is right, that's what I'm going to lose because I have the long call. That's what's going to lose me money. I have the, I take that back. I got 2 different positions in here. I got a sold vertical. I sold this. Let's look at it. Right. So if it's over $650, I'm going to make, it's minuscule, $174. It depends what you think minuscule is. Or that $174 can have me lose $826. You're like, what? All you're going to make is $174 to make risk losing $826 for $174. Well, hey, let's do the math. 174, divided by 826. That's 20% profit. That's not bad. That's like you take $800 to the bank, and they say, hey, couple of days, I'm going to go ahead and give you $174 for this. You'll have $974. But, it's a good chance. There's a chance somebody might rob the bank tonight, catch us on fire, Would you do it? You might like, all right, yeah, I like the odds on that. Yeah, you might do it. So that's if it comes way down here. Nobody knows, You're just playing. This is the safer bet. A little scary around earnings times because anything can happen, but it's safe. The probabilities are on my side to be right. All right, so it's not necessarily a 50-50 toss up, a coin flip. The odds are on my side to be right. Let me turn this off. All right, there we go. So now, and then I did a calendar. And now we'll look at that separately. It was a little confusing. So it's at 700. It looks like it's at 700 now. Anyway, so if it goes up that 50, I'll be up 2,300. If it goes up 30, the most I'll make is 29.63. But if it goes down that 50, I'll be out $681. But if you combine both of those positions, if it went down that 50, I'll be down 1154. No, 507. It's weird how it says it today. Anyway, this is the important side. It's nice to talk about the gains, what you could make, but this is the side that's you have to manage, what you're going to lose. Let me slide that over, get away from my picture. This is what you're going to lose because actually y'all couldn't see those numbers. Oh yeah, you could. This is what you're going to lose because these are the numbers that can make you go broke. These are the numbers that you ain't going to have no more money to trade, right? So you have to watch these numbers right here. The losses. They say watch your losses. The gains will take care of itself. So that's what I'm doing. I'm going to go ahead and risk that. And let's just hope I'm right. And forget about that. As long as I don't lose that, of course, then I probably have made some money. So that's the trade. That's the trade. Also, I got some trades on like the Russell. And I've been gone for a week. I've been busy. I was at the beach. I was at the beach with my laptop trading. Just kicked up. Yeah. Let me tell you something. It is not that simple. It is not that simple. You got to be eyeing your positions. Yeah. Make some money. I'm at the beach. Yeah. Okay. Anybody that's telling you that, no. That's why they're making YouTube videos or whatever. Or where have you seen them? Why ain't they at the beach then? Not too many videos out there with somebody at the beach. If it is, it's totally staged. Probably don't have any money in the market. Anyway, so very hard to do. Trading from a phone on a distance. You can't really do the things that you normally do. So let's talk about the Russell, not necessarily my position. It's a little late coming to the game. Remember I showed you the Qs, the NASDAQ, then I showed you the SPY. Look how this is like nowhere near record highs. Let's go to the week. It's just nowhere near it. But look at that consolidation right here. I really, really like this. This is almost like the Facebook trade. Put a cup in a plate up there. That's what I like to do. That's my coin terminology. Put a cup. If you could put a cup and a plate on it, it's going to make you some money. Eat that money. Eventually it's going to bust through. See, that's what's happening right there. That's what's happening. It's like it goes boom, boom, boom. Do I got to put my finger on it? Boom, boom, boom. Boom, 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 boom. And eventually these prices bust through that support. Just like the Hulk. Just bust through. Right? So I have positions on the downside of this, basically saying, let's go look at them. So where we at now? It's at 1590, 1590. Let's go ahead and look at some of my positions. That's just a couple. I'm basically saying by May 10th, that's right here, I sold a call spread, a put spread, excuse me, puts. It's bullish, meaning I'm hoping the stock goes up. So it's over here, the stock right now, and basically saying as long as you stay up here, anywhere up here, 1530 and above, that I will make $246. You can see it over here in the left. That's what, so I'm like, all right, that sounds cool. I mean, look at it. What is it, 230? I mean, 1530? Let's go back to the chart. 1530, right here. Oh, shoot. Got to get the trend line going. 1530 right here. So basically, I'm saying it's going to stay there. Let's go bring up the daily chart, and you could kind of look at that better. There we go. I'm saying, hey, man, the next 2 weeks, you're not going below this line. No way. No way, Jose. Dang, Jose. I hope you have a way. Just think if your name is Jose. You always hear Jose, no way. Anyway, that's my bet, right? That's my trade. So basically, $246 I'm going to make versus what I could lose. Now, let's say it does go below that. I'm going to lose $1,754. That's right. It's like, oh, man. Let's do the math. 254 divided by 1754. Wait, 254 divided by 1754. I hit the wrong button. This one's only a 14% gain. That I'm going to make 14% on my money. And my money is the 1754. Why? Because that's what I'm risking. I'm risking 754. I could lose it. That's on the table. So basically I'm saying here's 1754. Let's hope I don't lose it. And maybe I can get a 14% return on that. That 14% would be 221. So that's I'm sorry, 246. So that's the trade. That's the trade on the Russell, which is the small caps, which is it's the index for the small caps. There's a ETF for that. And that is the IWM, right? That is the Russell 2000, the smallest, the top 2,000 small caps. Put a cup and a plate on that. I mean, look at it. So it's the same chart, different index, different instrument. Yeah, put the cup and plate on that. So if it's doing something like this, right, it most likely goes higher. If you could look at my Facebook trade. I told you the same thing. Doesn't that look really similar? But you see Facebook breaking out. That's what I think is going to happen to the Russell. And I'm playing that move. I'm playing that move, the anticipation of it. All right, so here's another trade I got on 3M, and I talked about these. These I got, I'm up here. I'm like, you know what? I think I said 227. I said, you're not going above that line in the next week or two. I like the short-term options. They're a little scarier, but I could kind of see it. I could see it on the graph. I could say, you know what, this thing is not going to just skyrocket. It's going to kind of do what it's doing right now, right? And keep doing that, and then just do that, and don't go up there in the next 10 days, and I made money. I can't remember the exact trade. Is it on here? Oh, this is the trade I got. This is it right here. So basically, if it stays above 227, 228.43, 228.22 is my break even. I'll make, look at that, I'll make $671. If it doesn't, I lose $3,329. Let's do the math. 671 divided by 3,000. What was that? 3,329. That's a 20% profit on my gain. And that's how you kind of got to do it. Oh, man. Yeah, so that's what's going on. Do I wait till the end? Do I wait till that last day? Let me see. What is it? May 17th. And just lose all of that? No. If this thing starts going up, approaching that my little line there, even though I have confidence in it, I'll probably get out. I'll just say, you know what, I'm out. Because every day, anyway, I'm making money on that. I'm making money on that. Let's look at that. I'm making $22 every day. That it doesn't do that. I'm making $22 on that trade because options lose value. So I sell them. I sell them to you, not necessarily you, but someone else. They buy it, think it's going to go up. It doesn't go up because most options lose money, and I collect that premium that you paid for that. And even if it does go up, look, even if it does go up, I still make money. It could go up another $9, and I still make it, you know. So that's why you always should sell options and not buy them unless you're certain. It's just that you have to be right in direction and right on time. Sometimes that's hard to do because we don't know what stocks are going to do. It could start bouncing around. It could, you know, so you really have to be right, you know, and if you are, you will make a boatload of money. You will make a boatload of money. Amazon, speaking of boatloads, I made a boatload on this. Yes, indeed. I totally played this trend. Go back in the old videos and you'll see it. You'll see it. See Amazon and totally played this. You just knew it's coming. Now it's approaching the top. It's approaching the top. I think it reaches that top. See, I think a lot of these NASDAQ stocks reach the top because if you look at the NASDAQ itself, it's already over the top. These are like laggards. But these are strong stocks. These are stocks everyone loves. So I do think once they get there, maybe this thing could turn around, right? Also, you know, I have a trade on the S&P 500. I think I talked about this. Playing for that double top. I think this thing is going to just chill out a little bit. Yeah, sold up here. Let's look at the analyze. You'll see the position right here. As long as this, I said 29.50. That's not too high. That's like right here. But that's April 26th. That's by Friday. That's by Friday. So by Friday, as long as this thing don't rally. Now, I really have to think about this position because if Facebook blows it out, who else is this week? Amazon, I think. It's probably going to go higher. They're going to just bring the market up. So I might have to analyze that a little bit more to see if I want that. It's a little closer than I thought it was. I thought it was up here. But see, I'm playing this high. I'm like, you're not getting above this 29.40. You're not just going to blow through that. And I don't know. The Qs did it. The Qs, the NASDAQ, they just said, what high? What high? Yeah, right here, they just blew through that. Boom, gone. Gone. No respect to former highs. It's crazy. It's crazy. So I think I'm in this video pretty long. Where am I? I don't even know. I don't know how long I've been going. Well, for some time. So that's what's going on. Let's see what the Dow is doing. Oh, yeah, there's one more trade I'm thinking about. Let's see how the Dow is kind of wanting to not really blow through the high. Looks like it's getting tight. Look at that trend. Correction. The trend is looking kind of weak. Right around the high. So I think it chills, goes down. I don't know. I think we ran enough for now. Just for now. Apple is the other trade that I'm thinking about. It's just steady. Look at that move from 143. You don't see moves like this in stocks like this all the time. This is a 45% move. 45% on your money, and the stock pays a dividend. Wow. So I think Apple continues higher. I think it just rides that trend line to the high. And I'm thinking about selling something under here. But let me pull up the daily. I need a pullback. See how it's coming down and down. It's just up. I need it to come down here. Come back into this 200 so I could sell something down here. But I'm liking Apple for higher. I almost want to buy call spread. I want to buy something. But yeah, it's going up there. So that's what's up. That's what I'm doing in the market. We could talk about my trades tomorrow. Oh, it'd be so hard if I just lost a bunch of money to talk about it. But I guess that's what I want to do, and that's why I'm making these videos. Win or lose, this is, what I'm doing. And I'm not saying for you to do it. You probably should do the opposite. Although if you had been doing the opposite, you would be losing lots of money. But yeah, that's, generally I don't play earnings. Sometimes I'm feeling a little confident. That's usually a bad time to not do it. But everything has been just, everybody's just blowing them out. Caterpillar. I put a trade on under here. I sold a put spread. It was coming down hard. Look at this morning's action. Right here, look at that. Boom! And then I came down here and sold the 132, 131. Oh, it's on my other, I did it on my other account. It's not on here, but I sold it for like, I sold the 132, 131. We can line it out right here. 132 right here. And then 131. I basically said it's not going to go below that line in the next maybe 2 weeks or so. It's not going to do it. And I sold it for 20 cents. The most I can lose is 80 cents. So what's 20 divided by 80 is 25% profit. I did that several times, lots of times. I'll probably be out of the position when it's half, when I get half that money. So I won't be in for the whole thing. But I think that was a good trade. I totally played it into the fade this morning. Look at that, boom. That's when the volatility is going up. That's when you'll get most for these put options, when you just totally sell into that or buy. Well, you're selling the put spread, but you're being bullish into that as it's sinking down. And I was like, all right, y'all scared of it? So everybody's scared. The prices go up when you're scared. And everybody thinks it, and then you take advantage of that. You sell it, you buy it and sell it, I should say. Although it's going up. You're playing it for it to go up. That's a bull put spread. That's what that's called. Anyway, so thanks for watching. I hope you stayed to the end of the video. Let me know what you're trading and stuff. We could talk about it. Put it in the comments. But talk about the next video, right? Talk about it. I like doing these. These is fun. Uh-oh. Side I made money. Let's see what the hell happened here. Monitor filled. Did that just happen? Oh, that's the other account. Something happened on the other account. Anyway, so that's what's going on. Yeah, let me know how you like these videos. This is a pretty long video. And put your comments down. Thumbs up. Thumbs up if you're still in here. I'm showing that you're in here. Except for this one. Yeah, thumbs it up. Oh, man. Yeah, look at this. This is the SPY. It's making a little comeback today. I'm just now looking at it. This is the 1 minute. Yeah, look at that. It's at daily highs right now. I mean, for some reason, this market does not want to go down. It's like, no, I'm not going down. It's greed. It's greed start getting in. But you could take advantage. Look at this thing. Holy cow. See? Anyway, so, yeah. Let me know how you like it. Thumbs up. I appreciate it. I thank everyone for watching. Hopefully, I need to explain it a little better, but, if you deep in the option, you already know what I'm talking about. Jeffrey, if you're watching, you know what I'm talking about. Other people, I'm not really a teacher. It's hard for me to explain this stuff, but I did my best today. But that's where, I like trading options. You see that's where the money's at. They're easier to trade. They're not a lot. If I were to buy 100 shares of Apple, trading at 200 and one share of Apple costs you $208. If I buy 100 shares of that, that's $20,800 I would need. $20,800. And then it would need to go to up $10. It would need to be $218 just for me to make $1,000. Now look what I was showing you for me to make $1,000 now. So that's why I don't trade stocks. You can make more with options and use less money to do that. Less money to make more. That's like incredible. You can't trade all stocks because, some of the options out there are thin. That means then it's not liquid. It means you'll spend a lot of money, meaning nobody's trading them. So if nobody's trading them, you're going to get high prices. That's like, hey, you try to buy a PlayStation, the first one. You can't find it nowhere. You finally find a dude that's got one. You're probably going to overpay. He's going to be like, yo, you can't get this nowhere. $200. $200 for you. Anyway, so that's what they do with the options. So you got to find stocks that are liquid, where there's hundreds of them. Anyway, so thanks for watching again. I got to end this video, but I love talking this stuff, man. Love it. All right, I'm Dre. This is Dre. That's right. This is Dre. You're trading stocks. This is the Dre Show. I said it twice. Thanks for watching. I appreciate you. Come back tomorrow. See ya.